Well, give us an update on the business. Europe, everybody comes in here and they tell us, every CFO, CEO tells us Europe's in fighting form, recovery's on the way. Would you agree?
Amazing what a difference 6 months makes it. We agree. We agree. Overall strong performance across all of our regions. Stability seems to return, which is what business is like, and that's helped. I think consumer confidence is up generally. So overall, pretty beneficial macro environment.
OK, and we've got a chart here of the French consumer confidence numbers. We get an update on this week, Jaap. And I mentioned this because, of course, you have many shopping centres in France, and so you're very close to this story. But interestingly, I spoke to an economist at Citigroup yesterday who was cautioning me, saying this happens before, at the time of every new president, you get an uptick in French consumer confidence, and then it kind of falls away a little bit as reality dawns. What are you seeing in France, then? So
far, positive. I mean, we outperformed the national sales indices by about 455 basis points. So the shopping centre, the strategy works. And I always say we're not a proxy for the macro, but overall we see a currently supportive environment. I'm not going to, other than my numbers, I'm not going to make many predictions on what actually happens in politics in particular.
We'll get to the UK aspect in a moment, but we talk about the migration, the potential migration from the UK into mainland Europe. Where is going to be hot? Where's going to be the winner in sentiment in Europe in a post-Brexit world?
I think there's still an awful lot that needs to be decided in terms of where ultimately this deal comes out and what kind of rights there are. I think you're starting to see movements of banks at least getting real offices outside of the UK. I think we'll see winners in terms of banks, that seem to be Frankfurt and Dublin seem to be attracting a fairly significant amount of head offices, if you will, or relocating offices. But the financial industry is bigger than just banks, right? You've got insurance companies, you've got fund management companies, so we think there's plenty of opportunity still to come. And
you're in a broad range of assets in France, but you're more in shopping centres in other parts of Europe. So with that in mind, does that make you want to branch out into more office space in other parts of Europe, in Frankfurt or in Dublin, the places you mentioned? Well,
they're already very established players. I'm not sure we can add a whole lot of value other than a very cheap cost of capital. But we'd hate to try to land somewhere where you still require specialized knowledge just as a foreigner with a lot of money. And does this spin off, though, into more retail opportunity, more shopping centre opportunities in those places? Overall, the same applies with the local I don't think there's a fundamental thing that shifts. I mean, if you move a couple of hundred people over, find that together they get a couple of thousand, but that doesn't create more demand necessarily for a shopping centre as such.
It's about scale. In each 6 months you come in each 6 months Anna and I ask you about the UK. So let's have another go at it. We'll have another go. When you look at, tell me your perspective of the political landscape and whether that makes you less enthusiastic about looking for deals here.
The UK I fundamentally believe UK will always be a good country. I said that before, London in particular. I think what you see with the political uncertainty, I think that the elections have proven the lack of political, if you will, stability. I'm not sure that the cabinet at this point has actually really figured out what it is they want to accomplish, or whether they actually properly read what the European Union wants to accomplish out of this. So I think for us making investments at this point, I'm not sure what kind of discount rate to use in order to get the appropriate return for the risk we'd be taking.
OK, so therefore too many uncertainties to make the numbers work. In terms of the relationship between bricks and mortar retail and the internet retail story, I noticed one of the comments around your numbers was around advertising income, suggesting that this is a small but fast-growing part of your business mix. Is this an attempt to sort of embrace digital retail at a time when you must be quite nervous about the impact that it could have?
Well, actually, it's very interesting, Anna. We're making revenues out of digital advertising. We're incorporating the internet in our business. We're not running away from it. But I think the hype that's coming, especially out of the US at this point about retail Armageddon and the like, it is wholly overblown. If you look at the quality of the shopping centres, the high-quality shopping centres continue to do really very well. And we have a chart in our presentation that shows you, despite rapid growth in the internet, for example, in France, the large shopping centres have actually gained market share. So internet sales growth, tenant sales growth in good shopping centres, not mutually exclusive.
Do you think that there's still the ability to embrace internet, to embrace delivery, which is underpriced within retail?
I think so, and I think that's one of the things that in order to thrive in a rapidly changing environment, you need to invest. And we see too many retailers that have balance sheets, stretched or otherwise, that no longer have the financial flexibility to actually adapt to a changing environment. We've invested, over the last 5 years, by the end of this year, we'll have invested $6.2 billion worth of capital in our shopping centres, delivering new shopping centres, extending existing shopping centres.
Which takes us we were putting together some questions for you, and we looked at the dividend question. If you're going down that road with capex, where are we with the dividend remuneration for the shareholder who's tuned in this morning?
We're paying out about 90% of our retained earnings, if you will, the cash flow, and we finance our development through the disposal of non-core assets, dry assets, and incremental debt.